why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello everyone, good afternoon, and once again, welcome back to our M Plus Wiz Pro highlights. And today, this is a weekly review, and we shall see what is happening in the market. And I believe that today itself, there is a lot of trending upward counters. I believe this is the last week, this is the final week of the year, and this will contribute to the window dressing activities. As I mentioned a lot of times in the previous weeks, December month is always a very good month for FBM KLCI. Over the past 20 years, there is about 17 times out of 20 times, there are 17 times it is on a positive side. So at this current moment, you can see that market is trending higher, 1530, and this actually is quite similar, to what happened after the Delta variant has happened. Later on, I'll show you the chart and we'll go through that once again. But I believe if this is quite similar to after the Delta variant trend, then we have another month called January effect, and that should boost the KLCI even higher. So later on, let's see what is going on in the chart later. Okay, so throughout the day itself, we can see that volume is quite thin, 1.2 billion. Value-wise, it's just about 600 over million. It is quite flat, quite neutral. Upward counters is just 400 counters, 320 counters down, and traded unchanged is 375. So what has happened in the market is KLCI was boosted strongly, 14.18%, 14.18 points, 0.94%, and you can see that what was the booster? It was coming from the healthcare. So healthcare is quite strong right now. You can say that people might be afraid of the situation of the Omicron variant, but again it is also boosting the rest of the counters. Like for instance, if you take note on this KLCI itself, out of 30 counters, 22 counters are up. So it means that they are also quite positive in the recovery tone. They are also quite positive in the window dressing activity. So that's why you can see everything has been boosted higher. Okay, everything has been boosted higher. So today itself, you can see healthcare has been turning into a very positive trend. The next followed by the industrial products. Let's see what's inside in industrial products. So basically, we have PCAM, P Metal, OMH, Jinhin, Hexstar, Comfort. Again, quite a lot. You can see that out of 10 counters, there are 2 related to healthcare. Glove counters. So other than that, PCAM, LC Titan related to recovery team, Scientex recovery team as well. Hexstar, chemical industry, OMH, and P Metal is building material segment. So everything seems like quite positive on the recovery tone. And perhaps you can also link it back to the situation of the window dressing activities. No doubt about it. So both are all right to give a booster towards these 2 sectors. So industrial products and also healthcare are quite optimistic right now. What about the third sector? You can see that construction is also up. Okay, so there might be a little bit of window dressing up in terms of Gamuda, Sun HSL. But overall, we can see that the general sentiment is also pointing towards a recovery theme. Okay, so yeah, we talk about the market, we talk about the rest of the sectors. Let's see what is a down sector. There isn't a lot of down sector, mostly are flat. As you can see, property is negative 0.06, energy is negative 0.09, utilities is negative 0.01%. So I don't see a very huge decline counters yet, but everything is seems to be on the positive side, a positive skewed sentiment. And the idea right now is window dressing and low volume, low value that pushes the index higher. So again, a lot of people are taking a break right now. December month should be a window dressing month, and people are not really doing any a lot of transactions. So you can see today is only 700, near to 670 million shares being traded. So that is not a lot compared to, you know, during first two quarters of this year. You can hit around 2.5 per day. At least half a day would be around 1.2 billion. Okay, so right now it's just 25% of what they are doing in the average this year. Okay, so this is giving you an idea of what is the breadth of the market. And if you notice, let me go through, let's see what is happening in the market. Maybe so most active volume, you can see that all these are counters, speculative counters, XOX, AT, SM Track, Ata IMS is quite a solid company, just that they are being, you know, struck off in terms of the contract. Top Glove is, you know, in top volume page, so this is quite huge. So other than that, it's quite staggered around, scattered around other ace markets. You know, this all these are not really interesting, solid fundamental companies, but they are thematic play. So out of these 10, 20 counters or 10, 20 counters, you can see that a lot of them are healthcare related. Top Glove, BCM More, a little bit of healthcare, Supermax Care Plus, HLT. Yeah, okay, so that is the whole idea on this market breadth, and also what is the situation, what are they trading. Basically, those not so I mean ace market counters, lower liners, and that is where the operators are making money from the retailers. Okay. Oh, okay, all right. So maybe let's change another view on this. Let me change the view first. Share screen, another one. We go to charts. Okay, we go to charts. Check. Hold on a second. Okay, hold on a second. There is some technical issue. I'm reloading the chart again. Okay, can you see my chart right now? If you can, just put in a Y. Let me know that you are able to see it. Okay. Okay, this is very interesting chart here. I've been drawing a lot of. Okay, let me erase. Okay, so this and also this. Okay, if you take note of when was the Delta variant came in, it was during this period of time, June, July, August, and we have seen a very huge collapse, okay, since 1,600 to this level. Similar case after budget, after Omicron has arrived, you can see that it has continued to collapse. But what is interesting is after that position, if you take note of this rebound, recovery, and then trying to break above this level here, and then this dodgy signal here. Okay, this dodgy signal here. Okay, this is similar to what happened on Friday. Okay, if you take note on this position. Okay, downward trend, recover, pull back, and then recover, and then a dodgy sign. Okay, can you see that? Downward trend, rebound, pull back, rebound higher. This is a very solid bullish candle, and then later part it turned into a dodgy. So I was talking to my dealers and reminders this morning about this dodgy signal here, and we think it should consolidate. And if it is able to break out above this dodgy signal, it is going to be seeing a huge run up. Okay, so it's similar case here and similar position as well, almost similar position. You can see that the previous resistance was around 1526, and right now it's around 1518, and it break out. Okay, so I'm expecting this to happen because this is after this is after the Delta variant, and this is after the Omicron variant. So everything seems to be in line. People are using the same charts, and therefore we can see a breakout towards above the 1526 early on, and this round is above the 1518 level. So this should come back strongly, similar case to what happened early on, at least for another 50 to 70 points. Okay, so that is what I'm going to expect in the next coming few weeks. Okay, even if just 1 week it can hit the target, I would say that it is very similar, and we have anticipated that to happen. And don't forget about the January effect. Normally, people would push the stock market even higher during January, and then it will fizzle off towards near towards Chinese New Year, and wait for the Chinese New Year break. So it's very similar to what happened here. Maybe January will top out this kind of situation. Then we take some consolidation phase throughout the Chinese New Year period, and then we rally again in the month March and also April. So that is how I'm looking at it. Similar pattern should happen along the next couple of months, like something like this. And although there is an element of fear of lockdowns, and also element of uncertainty in terms of political scene, but I would say that most of them are priced in, and very likely it will uh, perform this kind of formation in the next coming 1 to 2 quarters. So that is my anticipation. And in terms of my signal, my indicators, it has been telling me that we should turn positive from this point onwards. For instance, this blue and red DMI or ADX indicator is telling us that early on, after the sell down, once we are seeing this pattern here, it is on the way up. Similar case here, we have the crossing of the blue line, yeah, the blue line above the red line, and right now it's turning positive. So it has given us a signal maybe 2 to 3 trading days ago. So that is where the indicators would help. So I would suggest, if you are interested to use ADX indicator, I think it is worthwhile to look at it and try to use this as a form of giving you a higher probability. So when the blue line is above the red line, you shall enter the market or select the counters that are more relevant, and you enter it. Okay, and if it is a red color crossing above the blue color, then you shall take some profits, or you shall take you shall go away and avoid the market from that point. Okay, so yep, that is just a very easy indicator to give you a better opportunity, better entry, and also exit in the market. Okay, so before we go into our daily picks today and talk about our review on what we have picked for today, make sure you have shared your share this video out, and also like the video. In order to get your counter being reviewed, you have to have a sharer badge. Okay, sharer tag on top of the name. So once you have shared the video out, you will be able to get the sharer badge, and also like the video in order for us to review your counter. So I've seen some of the people are doing it, some of the viewers are doing it. So hopefully everyone can do it, and you can we can reach out into we can reach out to more people on this video, and you will benefit the rest of the people, and you also benefit yourself by us reviewing your stock. Okay, So our daily picks today are quite interesting because we have put in some counters under the oil and gas oil and gas sector, and it did open at the point that you can buy at 128, and it suspended. I think maybe 9:30 to 10:30, and it has announced a contract win for Coastal, and then it has rallied strongly towards one ring at 44 cents. So it has hit our target, okay, for this Coastal, but we have picked the right counter at the right time, and I think this is very worthwhile to look at it. And some other oil and gas counters are also in our list because uh, one of the factors are the the Brent oil prices are actually firming up above the 64, 65. Right now it's about 76. So that is also giving us a good confidence level that people are expecting the demand to come back, and therefore the share price or the oil price is actually moving higher. So that's why we have put in some counters under the oil and gas sector. So Coastal, Hibiscus are in, and so these two are the only oil and gas counters for now. Why do we pick Genting is because we think there could be some chance of window dressing activities, and therefore it is slightly higher, 0.4%, but it didn't really trigger us anything so far. So we just have to monitor whether it give us any clue at the next session. But overall, this is a very strong selling pressure when Omicron fear is keep coming out. But people have already overcame this situation here, and challenging this previous lowest point of that particular bar, which is 4.71 level, and that is telling us that people are all right, to buy above this selling pressure, but it is still not able to cross above the previous another selling pressure yet. Okay, so this will be the range that if there is a breakout above the 472, next target should be around the 492 level for Genting. Okay, although it has not triggered anything yet, but I would say that technical analysis point of view is given an opportunity to trade the rebound. And don't forget that this week itself, it is the window dressing activities period, and that could also leave Genting higher, perhaps towards 492. Never know what is the last minute, what the market will do for the window dressing activities. Okay. So Coastal Hibiscus we have covered. It is under the oil and gas sector that due to the firmer crude oil price, therefore we are looking at it. Genting is on the recovery team, window dressing activities, and it is above the certain selling pressure. So we think that there is a chance. Okay, let's look into tech counters. I think tech counters uh, worth to look at is because the technology stocks are having good earnings visibility going forward, and I think that may contribute to a solid earnings in February month, and all this will come back again within the technology stock. So I think technology has the chance of improving in terms of the share price or in terms of the earnings visibility, and therefore we are putting in some. So in GF Tech itself, you can see that it has been only consolidating sideways, and right now there is a good opportunity because everything seems to be turning into a positive position. You can see that the ADX indicator is telling us positive, and it should continue to trade higher towards the 148, towards the 158 level over the mid to long term. So this could be a very good oversold position that may rebound higher towards this 158, and we shall take note of this because today it has triggered us. Hopefully it doesn't come down to 139, and we have a cut loss position by then. Okay, so 139 is definitely the cut loss point. Right now we have entered around maybe 145, 146 level. Okay, so let's see how does it pan out. But overall, I think I have very good confidence that technology stocks will turn into a better footing going forward. So in terms of the share price of the whole technology sector is not too It's not into a correction phase yet. It's still within the mild pullback, healthy correction phase kind of position. So it needs to hang above the 93 level. It should break out above the 95, 96, and hit again the target of around 100. So I think that should be the realistic a realistic approach on technology sector. Okay, for Chrono, this is what we have put in today as well. We thought this could be a position good enough for us to monitor for the oversold rebound play. And this is after a few rounds of sell down. You can see the sell down phase throughout this period of time, and then a sell down phase again, and it has started to perform a flat formation breakout. So this flat formation breakout gives us a good confidence that the downward trend has ended and potentially ended, and it should rebound higher. So what we are going to anticipate here is a mild pullback or mild consolidation, and then a breakout. So overall, I see this as a good opportunity to monitor for breakouts, and with the cut loss point located around this level here, which is around 9.5 cents. The next few targets that you are going to monitor will be around the 66.5, and yeah, the next one will be around the 72 cents level. So these are the range that we are going to monitor for a good rebound play, and also hopefully that the consolidation phase are inside over the next couple of days before the breakout happens. So in terms of the indicator wise, it is also positive already. Yeah, DMI has already given us a signal here. So overall chart pattern is positive. So the other one is UWC under the tech counters as well. Right now, we're still anticipating the correction phase to end, and hopefully there is a breakout above this box here. So the box is giving us a very good consolidation phase. We just need to wait for the breakout to happen. So the signal wise on the ADX indicator has not given us anything yet, but hopefully that it will give us something like this. If the blue line is crossing above the red line, and that is the point that you might want to enter the stock market. So overall, this is still sideways trending mode. We saw the signal come in this morning, but it hasn't really given us a good rally yet. So we shall monitor closely on this. Your cut loss point is at this level here, 5 ringgit at 66 cents level. Resistance is around 590 to a 60 ringgit level. Okay, last two of the daily picks is Resin Tech. This is under our technical focus as well this morning, and this has given us a breakout above the 88.5. It has not hit the target around the 96 cents level yet, but I would say that it is not too far away from the target, and the next target will be around 103. And the cut loss point is around 84 cents. Bear in mind, this is a very strong uptrend in tech move counter, and very likely it should trend towards 96 or even 103 with the cut loss around the 84 cents level. So this has given us a very good trading opportunity, and it has hit around 6 million shares traded per day for today, and it has up 2.9 to 5%, I think, for the highest point this morning. So I think this is a very good commendable trade for today. Scomnet, as we mentioned a few times in our session here, I think this is also performing quite well. Uptrend in tech position, sideways consolidation phase earlier on has taken a breakout today. So it has also formed the so-called the cup and handle, or you want to call it the double bottom formation, whatever you want to call it, is turning positive, or even the inverted head and shoulders formation. And so this is very nearby towards all these resistance, and this is definitely already an uptrend in tech move, and we should be able to see further upside by, I think, another few weeks or so. There is a very good reason why Scomnet is going higher, because in the US they need more medical equipments, and due to this Omicron variant, and if the company that is supplying to the medical industry in the US, such as Scomnet, that could benefit. Okay, so just watch out. I think the cut loss point is very nearby, 196. but I think there is also a very good chance that it should continue to make a very good move from this point. Volume wise, it's quite decent. It is gradually trending higher, and in terms of the share price, you can see that in terms of indicators wise, you can see that since this part of the day, it has been turning positive. So September, end of September, or yeah, early September. I think early September it has started this 146 has given us a signal, and until now it has not triggered any selling huge selling pressure yet. So overall, I think still are able to hold for this counter. Okay, so yeah, so right now I'm going to the Q&A section. I'll take around 5 to 10 minutes to talk about it, and if you want your company to be reviewed, or your portfolio to be reviewed, make sure you have a share badge and also like the video, and we will talk about your counters later on. Okay, so I'll go through quickly on those counters that are quite they are being asked by our viewers. Okay, so on Care Plus, I think it has fallen quite a bit recently after the 2 day surge of this Omicron emergence of the news of on Omicron. It has risen quite a fair bit from 98 cents towards 1 ringgit and 50 cents. So there's a very huge 60% gain. It has pulled back quite significantly. Oh, okay. How about right now? Right now, what is the what is the sentiment? I think it is positive. To me, gold counters by hook or by crook, they are good in terms of their fundamentals. They are good in terms of their balance sheet compared to 2 years ago. So that's why people are buying it, not because their ASP is going higher, but they are a stronger company compared to 2 years ago. So that is how I look into it. But again, if you want to put in money into counters like CarePlus or even Rubber Racks or HLT, maybe they are too small. You can consider Hata, Supermax, Top Glove, or even Comfort Gloves, or whoever that is in the higher tier range. Okay, so CarePlus right now is positive, and it has breakout today above the 1 ringgit and 1 ringgit 6 cents level. Our next target will be located around the 1 ringgit and 18 cents towards 1 ringgit and 37 cents. The risk on this will be, once the Omicron is not as fearful as before, then they will sell down, or ASP has dropped more than their cost, and therefore they are incurring losses. Then that would dampen their share price. But if not, overall balance sheet is stronger, company is stronger, able to pay dividend, and that should leave the at least support the glove counters at this range. Okay, so Care Plus or any other glove counters should be quite positive to enter for a long-term investment. But don't expect the exponential growth like 2020 will come back again. It will not, unless another pandemic happens where we don't have any vaccine and things like that to protect us. But for now, I don't think the Omicron fear will be as fearful as before. And data shows that the mortality rate and also hospitalization rate is not as huge. Even the symptoms amount, although they might contribute to more hospitalization, but at least they'll be discharged much easier. Okay, so Care Plus is positive to me. Risk and reward ratio is fair for the time being. Okay, and then the counter Sedania, it has rebounded today mildly. I think if you take note of what I have mentioned earlier on, the small cap lower liners are up. Sedania is also in that league itself, although it's not turning positively on the indicators wise, but this should be on a downside risk is limited kind of formation. It rebounded from 48 cents above the 50 cents right now, and the next target will be 55 and also 59.5. So overall, it's just a pullback and then a rebound phase, and the rebound phase should be limited for the time being because signals are not too positive yet. So we shall monitor from this point onwards. Okay, monitor for a rebound only, but not a full-fledged of uptrend in tech move. Okay, dominant. Okay, on most of the furniture and also logging, sawmilling industry, they are expected to turn out well next quarter. There are several reasons. One is the flood situation in Malaysia, and that they contribute to more furniture demand. Secondly, is that most of our furniture companies are also directing their export sales to US, and US is on a recovery tone, opening up of all these economic activities that also boosted the demand for furniture as well. So overall, there is still a lot of thematic or storyline to portray for the furniture related industry. So hopefully that could also bring up the demand on the share price for dominant or the furniture industry. So this counter right now is still an uptrend counter, so you don't need not to worry too much. Cut loss one is around 1 ringgit 11 cents. Just that it is not able to trend higher over the past 2 weeks. It could be still in the consolidation phase. But what I'm seeing right now is a potential breakout, continued breakout towards around the 122, 124 level. I think the flood situation storyline is good for furniture counters at this juncture. So another sector that you can also look at is consumer electronics, like Keen, the Panasonic, or even Fiamma, or even this Panasonic as well, Panasonic and Panasonic. So there are four companies under consumer electronics. So you can actually take note of these few counters that may put in the operators might look out for these counters to trade as well. Okay, so dominant is positive. The other one is Tasco and me. Okay, Tasco and me. So Tasco is the economic activities kind of play. They are also a vaccine distributor. I think it's positive right now. It has turned positive in terms of the DMI indicator. So overall, I see no reason or the downside risk is limited for the time being, and hopefully that it can continue to break out above the 1 ringgit 15 cents. Our next target will be around the 1 ringgit 19 cents towards the 1 ringgit 25 cents. So as long as there is booster shots, given the need transporter, Tasco is a core logistic player that may benefit out of this scenario. And overall, all these booster shots will also benefit vaccine players. All these vaccine related companies in the US has benefited. So when they arrive in Malaysia, who are the distributors? One of them is Tasco, and Tasco should be able to help out in this situation to distribute the booster shots and also benefit out of these higher charter rates in the overall global recovering tone in terms of their freight as well. Okay, so overall, the transportation and logistics industry should benefit under this COVID-19 situation, and should continue to turn out well in terms of the earnings in February quarterly reporting season. Okay. Me, Technovation. Me, I think right now is in the pullback phase. It is still, I would say that it is still having a good chance to rebound, but the chances of rebounding and continue to sustain on the uptrend formation needs to wait a little bit because it is forming this double bottom formation. But again, you can see that it is lower high formation. So which means that people are not willing to sell below this support, but people are willing to sell. People are not willing to buy higher. Okay, so which means that there might be reason for people to sell down in the near term. So if you are trading on this counter, yes, you are all right to hold on for now. But if it is not able to cross above the 350 level, or even above this very strong resistance around 369, then you have a very good potential that this counter might fall towards 312 and break below 312 level. So that is the outlook for me equipment right now. Overall, it's considered as slightly negative for the time being. So you need to monitor around the 350, 369 level. The other one is MyNews. MyNews, although there is a recovery theme, but there isn't a strong buying interest into MyNews right now. Chart pattern wise is also not as decent. you can see that this is symmetrical triangle formation. We thought that it could break out above this high, but it did not. But it, however, it has fallen below this trend line here, rebound and pull back. So you can trade on a rebound play, but I don't think it's very advisable because every time you are in the negative region or negative indication on the indicators wise, you are likely to trade only very few ticks on few cents higher, but your risk will be much lower. Okay, so for instance, this you have two levels of support here. One is 81 cents, one is 76 cents level. Very likely, based on the chart pattern and based on my experience, this is likely to continue to go down. Okay, so I think we have another few more counters. I think we will just take three more. That's about it for today. 1:10 p.m. I will stop the session because we have already covered most of the counters and also most of the daily picks. So for EFOS, I think this is definitely a positive counter for the time being, and also bear in mind this recent state election of Malacca and also the Sarawak election has given us a new potential or the new factor to take note of that the current government might continue to sustain their power for the next upcoming election. So therefore, EFOS could be also linked to political link kind of the team. And because of TS Wong is the common shareholders of EFOS and also MyEG, and so that's why you can see that share price has been boosted quite well. So supported around 57.5, breakout above 59.5. I would say that this is quite likely, very likely, it should continue to give us a very good upward formation. The first rally was here, it pulled back, and then our next target will be located around the next level here, which is around 71 cents level. Okay, so overall chart pattern has been quite decent, and the indicator wise has been quite positive. So this is a good breakout. Overall, there is not much of downside risk for EFOS. Okay, another one, Evergreen, which is related to furniture. Today has a breakout. I think today itself, there are several companies under the furniture related has breakout. So I believe that all these are all contributed by the flood situation, one of the team, and second is about the selling of the furniture towards US or even the economic recovery countries such as in the US that will benefit the tone in terms of the earnings, and that should provide a good impetus for people to trade the stock. So right now, Evergreen has broken out above the 48.5. Next target is around the 51.5 cents level. Okay, support is 46.5. So another one. Okay, let's see. Micron, last counter. Okay, Micron is the last counter. Micron seems like it wants to continue its downward trend for the time being. Let's see how does it pan out. But indicator-wise, telling us that it has been oversold and some spike in it in terms of the positive sentiment. So let's monitor throughout this period and see what happened here. But overall, the building material segment is very is a proxy towards the construction sector. So if construction sector is not really having a lot of contracts and restarting their work, and that should dampen the sentiment for overall situation for building material segment. So we can just draw some lines here to see whether does it break out over the next couple of days, a couple of weeks. But hopefully this is a good sideways consolidation phase that doesn't warrant another sell down phase. Okay, so and another point to take note is this is definitely a very strong resistance, which is a lot of people are selling during that particular time. So it is around the 50 cents level towards the 54 cents, 55 cents level. So if you are buying around this level, it can be considered as low risk zone. And the next target will be around the 50 cents towards 54 cents level, provided they break out above the 41 cents. So you can accumulate around this level here. I would say that it's quite low risk to enter. And just last final yeah, we have finished talking about the Micron. I think it is considered as a low risk zone to enter, and I expect the risk to reward ratio is very decent. So last thing that I want to mention is very important because FBM small cap has given us a very good signal here as well. It has been trending towards this 15,100 points to 50,200 points level, and it has rebounded few rounds. Okay, this is the first round, second round, third round, and fourth round, and right now it is trying to break out new high. Okay, it's trying to break out new high, which is the recent high here. But given the scenario that all these are already collapsing since October, and towards this level here, it has fallen by quite strongly, around 12 to 13%. I would say that this is a good zone for us to enter. And if small cap is covering around 600, 700 counters for the Bursa Malaysia, under Bursa Malaysia. So if this can rebound, which means that your chances of making good money out of this situation is also higher. Another point to take note is, the signal in terms of let me redraw again. Yeah, here. So this part here. Okay, so this part is the positive signal. So it's rallied, and then it pulled back, and then we can see that another round of positive has happened here. So you can buy here and then rally together with the small cap index. Starting point here, okay. And right now we are going to wait for the blue line to cross above the red line. Okay, so if that happens, it should come back towards this kind of move, and it should rally. So what right now what we are thinking here, this position here, is very similar to what happened in this scenario here. Okay, the 1 2 1 2. Okay, 1 2 1 2. So this is W shape. So it might continue to go down. Okay, and then sideways, and then start to rebound, and that should contribute to this kind of formation here. So you just monitor on FBM small cap right now is forming this part of the position and waiting for this part to come in, and your rally should start. Okay, so that is just how I'm looking at it. But always look at indicators to give you a more appropriate entry going forward. Okay, so I guess we have covered most of the things today. Talk about the market. Market is slightly slower, softer trading activities, and that would contribute to the window dressing activities is much easier, because slower trading activities easier to push up higher. So right now you can see that the KLCI is on an upward trend, and the counters, that the thematic that we have mentioned here is on a daily basis, and they should be valid for another 6 to 7 days of trading activities. Okay, so that is just the whole idea of the M Plus Viz Pro. Okay, I guess I covered most of them. Hopefully you have a good trading last week of trading in 2021, and hopefully you can make some good money out of these window dressing activities. Okay, thank you so much, and see you again next week. Bye bye.